So thank you, Stuart, for joining us at the Salzburg Global Seminar. I'd like to start with my first question of getting a feeling from you of where we are really in the financial crisis. If we take the demise of Lehman Brothers as the 10 on the panic scale and that we've seen since the start of the problems, where are we now, and how can we be confident when the worst of the financial crisis is well and truly over?
That's a good question. I think we're probably at a 5, which is a good place to be. We couldn't get out of the crisis very fast. It is a global crisis of staggering magnitude. But I think there are some indications that the massive stimulus and extraordinary Federal Reserve and other central bank action has made enough of a difference to get a degree of stability. I think you see banks lending again. I think we see that them lending, albeit at a higher rate, a higher cost. But I think the credit crunch has eased. So we have some degree of stability. But I think we would be naive to think that we're definitely out of this. If we look at historic examples, we know that, for instance, in the Great Depression, there was a stock collapse followed by a rally of some months and then another collapse. So I don't think we're necessarily out of it. I think we shouldn't be complacent, but I do think there are some, albeit modest, green shoots at this point.
As a following up from that, I was wondering if you could comment on what you see as the main dangers going ahead in the financial crisis.
Well, I think there are a number of different ones. One is that there may be other parts of our economy that are still under stress that could precipitate further weakening of our banks. So in America, that would be the commercial real estate market, for instance. So you have other areas of our financial system that have hitherto been relatively stable that might actually deteriorate. So that's one problematic area. Another one is we have a modicum of confidence restored, but that is currently, I think, a relatively delicate thing. And so if we have an institution or institutions that are seen to teeter or collapse for whatever reason in the next few months, we could see that confidence erode very quickly. In other words, we could be on a downward trend again. So I think those are two key areas. I think we have to look at the real economy and what's happening there in case that deteriorates further, and we also have to bear in mind what the impacts might be if we do see other failures, financial failures. So obviously the regulators and the supervisors and the central bank governors have to be especially vigilant at this time.
So the financial system appears to have been saved for the time being, but I was wondering if you could identify for us what the next dangers are around the next corner.
Well, it's difficult to speculate in that way, and so I wouldn't want to be too speculative. I think lessons that we should learn, or I believe Chairman Bernanke learned from his study of the Great Crash in 1929, is that you need to act quickly, and you have to act sometimes in an ad hoc fashion that actually sends mixed messages, because you are indeed reacting to events as they occur, and so that you shouldn't adhere to necessarily an ideological purity that limits your ability to deal with the crisis as it emerges. That doesn't mean to say that they should not think about exit strategies, about what you do now that you have large financial institutions in many markets around the world owned by governments. Clearly that needs to be considered, and we don't know quite what those exit strategies are yet.
From your position in your organisation, which is in touch with policymakers worldwide, do you now believe that there's a consensus that has emerged of what the responses should be, and do all countries agree on that?
Well, clearly there'll be differences in nuance, and we see that between the US demand for very large stimulus and the Europeans' response that they have other mechanisms that help them adjust, and therefore that they won't take necessarily exactly the same type of actions as the Fed and the Treasury are in the United States. However, I think it's very noticeable, and indeed a good sign, that we have a remarkable degree of consensus over what to do next. We have the de la Rosière report in Europe. We have the G20 recommendations that came out on April the 2nd. And we have the work of the G30 itself, my group, which all of which is remarkably consensual and comes to the same conclusions about what we should do post-crisis to reinforce the global financial system.
I was wondering now if we could look on to what the banking sector might look like in the post-crisis world. If you could sketch out what that landscape will look like, and the main characteristics of the new banking sector that will emerge from the wreckage of 2008 and 2009.
I think we have to be realistic and recognise that perhaps the banking sector, the financial sector as a whole, grew too large. So I expect that as a result of this crisis, post-crisis, that the banking sector, the financial sector as a whole, will be smaller. Indeed, it is already shrinking because it was oversized and took too much risks, delivered indeed a great deal of profit to a great many people during that boom. But post-crisis, it will be smaller. So I think as looking at it as a market, I think we'll see a smaller financial sector. And then, and as far as how the actors in the sector conduct business, I think it will be a more conservative business. I think it will be a more risk-averse business. That's not to say that banking isn't fundamentally about maturity transformation. It is, but I believe the financial sector leaders and the supervisors who oversee their actions recognize that excess risk was a fundamental part of this crisis. And going forward, the banking will in fact be a great deal more conservative.
Also, again, I'd like to draw on your experiences of talking to policymakers within your organisation. And I think that the question that a lot of people would like to ask to them is why didn't we learn from previous crises? This wasn't something that happened in isolation. There are precedents from which we could have learned.
I think that's a very good question. I think one has to be frank and honest and say that these types of banking crises have happened again and again, albeit not of this magnitude and not affecting the entire world at the same time. Once supervisors who have directly dealt with a previous banking crisis retire, the new generation doesn't remember those crises or those lessons. And so the same mistakes can reoccur. And I think, by way of an example, if you look at those countries that have suffered national banking crises or financial crises within supervisory memory, those countries had a more conservative prudential regime and have weathered the crises up to this point slightly better than those like the US that had forgotten the lessons of the past crises.
And just finally for us, Stuart, before you leave it, I was wondering whether you could just comment on what you'll take away from the Salzburg Global Seminar this week and its session on the financial crisis.
Well, I think it's an absolutely unique opportunity for a diverse group, and especially diverse group of policymakers, private sector actors, and others to get together and, in a very frank way, thrash out the issues that we're all facing, and also get the insights of the sort of leading thinkers in the field. And I think it's an important part of the learning process. Oftentimes, people are very busy putting out the fires in their own particular neighbourhood. But it's very good to have a place like the Salzburg Seminar where we can all come together sort of as a global group and say, okay, I understand what's happening in your neighbourhood, what about you? And what are the common lessons? And perhaps we can go forward as a group as a result, having learnt some of these lessons and hopefully implement them in our national environments.